You're scrolling through real estate listings, and every house that doesn't look condemned costs $500,000. The kitchen has countertops from 2003, the carpet is beige, and somehow this is called a starter home. Meanwhile, you're doing mental math on your salary, wondering if you missed a promotion or if the entire housing market has lost its mind. Spoiler, it's not you, it's the math. And today we're calculating who can actually afford a $500,000 house, not who banks will approve, but who can legitimately afford it without financial disaster. In dozens of US markets right now, $500,000 is baseline. That's not a mansion, that's a 1,200 square foot box with 3 bedrooms and a yard the size of a beach towel. Cities like Denver, Austin, anywhere near a major metro, this is what normal people are expected to afford. The median household income in America is around $84,000. We're asking people making $84,000 to buy homes costing 6 times their annual income. If that sounds insane, congratulations, you're paying attention. But everyone says you can do it. The mortgage broker approves you. Your parents did it on less. Some TikTok influencer flips houses with no money down. So what's the problem? The problem is everyone's lying about what affordable actually means. Let's start where dreams die, the down payment. 20% down on $500,000 is $100,000 cash. The median savings account in America has $8,000. You're not a little short, you're $92,000 short. I'll just save it, you say? If you're making $84,000 and somehow save 10% of your gross income, which almost nobody does, you're saving $8,400 per year. At that rate, it takes 12 years to save the down payment, assuming prices don't rise, which they will. So you put down 5% or 10% instead. Congratulations, you just unlocked PMI, private mortgage insurance. That's $200 to $400 per month extra, a poverty tax for not being wealthy enough. You're paying to protect the bank, not yourself. You somehow scrape together a 10% down payment, $50,000. That leaves a $450,000 loan. At 6 to 7% interest, your mortgage payment is around $2,800 per month. That's just principal and interest. Now add everything else. Property taxes, $500 month. Homeowners insurance, $300 month. Climate change made this expensive. Maintenance, $417 month. That's 1% of home value annually. Your actual monthly cost, $4,367. And that assumes nothing breaks, you don't need a new roof, and your HOA doesn't surprise you with a $3,000 special assessment. Financial advisors say don't spend more than 28% of gross income on housing. If $4,367 is 28% of your income, you need to make $187,000 per year. Using the more lenient 43% rule, you still need $150,000 annually. Only 10–20% of US households make $150,000 or more, which means 80% of American households cannot comfortably afford a $500,000 house. Let me show you a real example. Meet a household making $160,000, well above median, solidly upper middle class. They should be comfortable, right? After taxes and a modest $401k, they take home $9,500 per month. Subtract that $4,367 housing costs, leaving $5,133 for everything else. 2 car payments, $800. Car insurance, $250. Gas, $300. Student loans, $600. Health insurance premiums, $400. Groceries, $800. Utilities, $450. They're left with $1,533. We haven't touched clothing, entertainment, kids' activities, medical copays, or savings. This household spends 46% of take-home pay on housing. Not 28%, not 35%, nearly half. These aren't irresponsible people buying jet skis. They're just trying to live in a house the market calls normal. This is what it actually feels like. Checking your bank account before buying groceries. Saying no to your kid's field trip because that $35 might be needed for car repairs. Lying awake at 2 a.m., doing mental math about whether you can afford new tires this month. Being one unexpected expense away from disaster. Here's what nobody wants to admit. For 70–80% of American households, a $500,000 home is not affordable, not sustainably, not without accepting financial precariousness that would have been considered reckless a generation ago. This isn't personal failure. This isn't about not working hard enough. Home prices have increased 400% since 1990. Median household income up 180%. The math doesn't work. It cannot work. So stop looking at what you qualify for and start looking at what you can genuinely afford without turning life into a financial tightrope act. Find the number where you can pay the mortgage, handle maintenance, save for emergencies, invest for retirement, and occasionally not stress about money. For most people, that number is nowhere near $500,000. And that's fine. You're not less successful for being realistic. You're not failing at adulthood for refusing to financially drown yourself for granite countertops. The housing market will keep pretending these prices make sense. Banks will keep approving impossible loans. Real estate agents will keep saying it's a great time to buy. But you don't have to participate in collective financial insanity just because everyone else is. Sometimes the smartest move is recognizing when the game is rigged and choosing not to play.